Welcome back to the channel. My name is Brad, and today we're going to retire on NEOS. I'm drinking my coffee, sitting here going, I should just sell it all and buy the exact portfolio at the end of the video or PowerPoint presentation or whatever it is. So grab your coffee, let's enjoy life and see what NEOS has to offer. And again, none of this is financial advice or any other advice. It is just Brad sitting on the internet, running some numbers and having fun. And that is important for life. But let's go ahead and take a look at NEOS and what they offer. So NEOS has a bunch of funds. They have one on the S&P 500, the NASDAQ, the Russell. They have hedged funds with QQQH and SPYI. Of course, we have BTCI, we want Bitcoin, we have REITs, we have gold, we have a bond fund, we have a high yield bond fund, and then we have some cashy, which is short-term treasuries, and TLTI, which is on long-term treasuries. Well, I'm just going to go ahead and forewarn you, I did not use TLTI in any of the calculations because I'm a little worried about inflation on the 20-year bond, so I didn't use it. But we're just going to run through these so you can see exactly what they are, because maybe you're not familiar with them. So this is going to be quick, and then we're going to get to the portfolios and how I broke them out, and maybe you'll be able to retire quicker than you actually think. So one thing I'm going to go ahead and say, I used the percentage on the website. So SPYI is paying 12.05%. I normally just use 12% in my calculation, but today I used exactly what's on their website, just for simplicity. QQQI, which is on the NASDAQ, and it's paying 14.56. Russell is paying 14.45, and you can see the expense ratio. I did not use the Russell either. Just thought I'd throw that out. Thought I'd make it easy. QQQH, which is their hedge fund, which used to be NEOS. If you remember NEOS way back in the day, it's paying about 9.67. So there you have it. I did run the scenarios using hedge funds, just in case you don't want the volatility of having non-hedged funds. Just in case you're worried about things going south. SPYI, well, that is paying 7.8 according to their website. And now we're going to take a 2-second break to have a little sip of coffee. Did you get your coffee? Because everybody needs caffeine in the morning. BTCI is paying 27.92. There you have it. REITs, 11.16. Gold, 12.67. The bond fund, we normally don't talk about these, 5.67. It's not really high. And then the enhanced income credit select, these are the junk bonds more or less, and it is 8.68. Cashy, where you can hold short-term treasuries, is paying 5.12, and those 20-year treasuries is paying 6.51. But again, I did not use any treasuries. Thinking about this as a long-term investor, maybe you want them, but I personally don't want to go there. But we're going to just go ahead and do the financial advisor thing. These are these guys sitting in their little corporate offices saying, hey, you should have a 60-40 portfolio. Hey, you. Maybe you should. Because a 60-40 portfolio, just breaking it out, you put $1 million in, hey, it's going to pay you $108,000. That's actually not that bad. I was a little shocked. I just sat there and said, okay, I could put SPYI, QQQH, and then I put the bond fund in the high yield bond credit. And I came up with $108,000 using the percentages off their website. And I was like, 60-40. Wow, that's old school. But hey, I don't want all that risk. I'm going to hedge it. And I'm going to use the QQQH and the SPYI and do the same thing. 60-40 portfolio, $1 million. It's $81,000. Not as good as using SPYI and SPYI. Not as good as using SPYI and QQQI. But hey, 60-40 portfolio, you didn't think that it was going to outperform other things. But that is not the most interesting one, because again, at the end of the video, I'm going to show you what I'm going to do. I'm going to say it now. I'm just going to go do this because it just makes sense. It doesn't make sense. But anyway, we're just having a little bit of fun in the morning. Hey, if I broke this up a little more, what I'm going to say, diversified, and use SPYI, QQQI, you got to have 5% of Bitcoin. Maybe we put 5% of REITs. We put 5% into gold, and then we break the rest into those bond funds, because you know those advisors keep on saying you need those bonds. Anyway, it comes up to $118,000 if you split it up that way. So if you've been following along, it's getting a little bit better, even if we have those bonds in there, and that's 35% on bonds. That's not that bad. All right, but hey, we can do better. I think you can do better. We're going to do 60% into equities, SPYI, QQQI, and then we're going to do 7.5% to Bitcoin, 7.5% to REITs, 7.5% to gold, and then we're going to put the high yield bond credit in there at 7.5%, and we're going to hold 10% in cash. How about that? Just in case you're retired and you want to have cash, right? Look at that. You're at 130,000. Wait a second. You're at 118,000, 81,000, and 108,000. Huh. I sit there and say, now you got 10% in cash, and you're doing better than all the rest of them. You can't beat that almost. At least maybe you can. Then I'm going to say, hey, you don't want those equities wiping you out, so you want to use the hedge fund, because they have hedge funds. Right? Well, it's not really a hedge. They use a collar. They buy a put and sell a put, and they give you a protection on the downside. So it kind of helps you out. So there you have it. Doing the same portfolio as the last one, you went from 130,000 to 102,000. Yeah, 130 to 102. Just going to hedge funds instead of just the regular equity funds like SPYI and QQQI. And again, you do have some diversity there because you have gold, Bitcoin, REITs, and you have those high yield bonds in there. That's interesting. And if you do a little more to the equity side, and I use SPYI for the hedge, you had 104. Pass on that one. Uh-oh. 5%. 5% to cash. We're going to do 7.5% to Bitcoin, 7.5% to REITs, and we're going to do 7.5% to gold. I'm at $138,000 on $1 million. That's not that bad. And I'm looking at SPYI being at 35%, a little more into equities, and QQQI at 37.5%. And you can see how this breaks down financially. That's not that bad. 138,000 on that $1 million. And anybody that's been following along with NEOS, they don't have a whole lot of NAV erosion. You can say they do have a little bit, and I'm going to agree with you. But, and that's all due to how they roll the calls. But overall, anybody that says, oh, they're just a NAV erosion, is not looking at a chart very well. That's all I can say. They do recover, and it's all due to the price of the stock or the underlying. And that's how we do it. But they do have a little roll drag. But let's move on. Here is Brad's new portfolio. $1 million. I want to put 60% into QQQI and 40% into BTCI, and I'm going to get paid $200,000 a year. Wow. No, I'm not. That is not what I'm going to do. But when I saw that number, I went, that really makes you think. Can you live on $1 million just using NEOS? I'm going to say you can pick one of these portfolios. You can be high risk with QQQI and Bitcoin. You can do another fund paying $138,000, very little NAV erosion. You can do 5% in cash and use hedge funds, and now you're at 104. You can just split it up and go 60% into equities and 10% into cash, literally cash. You're sitting at 102. You could do $1 million and do that a little bit different, but $130,000, again, 10% in cash. It's not that bad. And you have some high yield bonds because, those financial advisors keep on telling you need high yield bonds. I don't know what they're talking about. Anyway, that's what they tell you that you need in your portfolio. And you can do SPYI and break it down very reasonably and get 118,000. All up to you on how you want to break it down. Very conservative 60-40 portfolio with hedged equity funds. Hedged. Wow. You're still at 81,000. And a standard 60-40 gets you that about 108,000. So which portfolio would you go with? I'm going to say, let's just go ahead and go all in on Bitcoin and QQQI. Just having a good time today. I'm just going to quickly say that is the end of what I was going to talk about. But I'm going to quickly look at some of these things up here and see what they say. Good morning to everyone. And anybody have any questions? Let's see what Sweet Dividend says. That's a 0.05 difference between the good puddings. Okay, never mind. We're just going ahead. Anything else? Let's see. Which portfolio did the couple on the thumbnail pick? They looked happy today. Well, they picked Bitcoin and QQQI because who could not live on $200,000? Well, there's probably some people that couldn't live on $200,000. That is a little more than what you probably should be living on in retirement. But hey, who knows? I mean, Brad put up there, hey, if I'm making $200,000 a year and I'm only reinvesting when it's 3.5% below my cost basis, I wouldn't have reinvested a whole lot besides the downturn back in April. So anyway, somebody brought this up. Hey, John, how we doing this morning? There is a new ETH fund coming out from NEOS. I'm going to also go ahead and tell you that there is a new international fund coming out from NEOS. Don't know what they're going to pay. Don't know when they're coming out. But they filed for that new ETH. Oh, this week. This week is when I saw it come out. At least for their file for it. So they still have 2.5 months before they can actually even do it. All right. This week does say, will BTCI move? Yeah, BTCI can go up. Any new funds on Rex? Yes, Rex. Well, one, I'm going to go ahead and throw this out. Rex is coming on the channel first week of September, so we can actually ask them directly what is coming out, even though they can't talk about anything that they filed. But we do know that they have new funds coming out. And Josh says, NEOS and Curve are the best. Yes. On gold, I'm going 50% into NEOS and 50% into Curve because I'm not going to pick which one's going to outperform the other. Just not going to go there. I'm just going to say They're both paying about that 12%. And why should I go ahead and pick between the two? I'm going to play them both because it goes back to that whole fishing thing. You fish with one rod, you can fish with two rods. I'm going to fish with two rods because maybe I have a better chance of winning. And there's no time in the morning to watch. Oh, let's see this live stream, and we'll review it tonight. Oh, you know what? I don't blame you because I'm going to go to the beach after this because I wanted to get it done so I can go enjoy the beach. So anyway, I'm going to answer one more. William, hi, Brad. If you were still working, 44 years old, you do a 60-40 Bitcoin. If I was 40 years old, you have to ask yourself a couple different questions. One, why do you need income? And I say everybody needs a little income. So ask yourself, how much do you want to get into capped funds at 40 years old? Maybe you just want to head build it out. But right now, I wouldn't be using capped funds unless you need that income for something. And we can always look about what you need it for. I mean, literally, if you put the money in, you could pay for your mortgage, you could pay for your car, you could pay for other things. And I fully get that. And maybe you still have a few more years to work and you can add to that. So I totally get that because that really changes your life. But that's all up to you. I would pick one that has Bitcoin in it. Whatever percentage that you put in there is up to you. But you should at least have a, 2.5 to 5%. I'm shooting for that 7.5% personally. That's where I'm headed. I want to get 7.5% into some type of Bitcoin or gold, maybe combine the two. So until next time, God bless.